As traders, we all want entries like this. But how do you do it? And more importantly, how do you do it consistently? You see, most strategies are either too complicated to follow or too vague to trust. One day they work, and the next, they blow up your account. But that's not trading, it's guessing. If you want structure, you need a strategy that's simple, repeatable, and backed by logic. And in this video, you'll learn exactly how to do that. We'll break down a powerful strategy step by step, showing you how to spot perfect entries, time them with confirmation, and manage your risk. Let's dive in. First, let's make sure your chart is ready. We'll need one indicator. It's a powerful all-in-one price action toolkit, but to keep things simple, we'll only use 4 features. First is order blocks. These zones show where smart money entered the market. The indicator plots them for you, and with one click, you can reveal the volumetric data underneath. That means you're seeing the volume that created it, not just a box on a chart. Next, fair value gaps, or FVGs. When the market moves fast, it leaves gaps between candles where trades didn't fill. These are called imbalances. Price often revisits these zones before continuing the move. They act like magnets, and the indicator maps them for you automatically. Then, change of character, or CHoCH. In a downtrend, a bullish CHoCH forms when price makes a lower low, then breaks above the previous lower high. This signals buyers are gaining control. In an uptrend, a bearish CHoCH forms when price makes a higher high, then breaks below the previous higher low, showing sellers are taking over. And finally, break of structure, or BOS. This confirms the trend direction. After a CHoCH signals a possible reversal, a BOS confirms that the new trend has started. In an uptrend, it occurs when price makes higher highs. In a downtrend, it happens when price makes lower lows. Now that you understand the tools, let's piece them together for the strategy. And if you want to follow along using the exact tools we're using in this video, you can get instant access to the Price Action Toolkit and our other premium tools with the link in the description. This strategy uses 2 time frames, the 1 hour and the 5 minute. The 1 hour gives us higher time frame context. The 5 minute gives us precise entries. You can apply this approach with the 4 hour and 15 minute or the daily and 1 hour. But in this video, we'll use the 1 hour and 5 minute time frames. Let's start with the higher time frame, the 1 hour. We start by looking for a bullish order block, the green zone drawn by the toolkit. But not every zone qualifies. It needs 2 confirmations. First, it must be followed by a fair value gap. This shows imbalance and confirms strong buyer activity. Second, the move after the order block must break a recent swing high. This is your BOS. These 2 conditions confirm that the order block had strength behind it. Once price returns to the order block, drop to the 5 minute or your lower time frame chart. Then wait for a bullish change of character. Price should be making lower highs and lower lows. When it breaks a previous lower high, that's your signal buyers are stepping in. After the CHoCH, wait for a new bullish order block to form on the 5 minute. If you want an aggressive entry, you can use that order block alone. But if you want extra confirmation, wait for a fair value gap to follow it. That shows the move has real momentum. Once you've chosen your entry criteria, place a buy limit at the order block and set your stop loss just under its low. For your take profit, either target the previous swing high on the 1 hour time frame or use a fixed 1:2 risk to reward ratio. Now let's flip it and look at the bearish setup. Start on the 1 hour and look for a bearish order block that meets these 2 conditions. First, it must be followed by a fair value gap, evidence of strong selling pressure. Second, the move must break a previous swing low. That's your break of structure. Once both are confirmed, wait for price to retrace back into it and then drop down to the 5 minute chart. Now watch for a change of character. Price should be making higher highs and higher lows. When it breaks a recent higher low, that's your CHoCH. Wait for a new bearish order block to form. For extra confirmation, it should be followed by a fair value gap to confirm the selling pressure. Set a sell limit at the order block and place your stop loss just above it. For take profit, either target the recent swing low on the 1 hour chart or use a fixed 1:2 risk to reward ratio. And that's the full system. The higher time frame shows where a reversal could happen, and the lower time frame helps you find a precise entry. But here's why that matters. You're not just trading a random level, you're trading alignment between time frames. The higher time frame shows intent. The lower time frame confirms it, and that intersection is where high probability trades occur. Everything in this strategy was spotted using the Price Action Toolkit. It detected the order blocks, confirmed the structure shifts, and highlighted the entries automatically. If you want to trade with the same clarity and structure, click the link in the description to get instant access to the Price Action Toolkit and our full suite of premium tools. That's all for this video. If you enjoyed it, please do us a favor and drop a like, comment, and subscribe. Thanks for watching, and until next time.